Hey Kris, what are you doing?
Oh, I'm just waiting, interest rates are kind of high and, inflation's kind of high. I just got a little bit of cash and I don't know, I just kind of feel like, I don't know, everyone else seems to be waiting, shouldn't I? That is exactly how you get your butt beaten in this bloody market right now. I'm gonna tell you that there are 5 excellent reasons to not follow the masses because the money is the other direction. Let me show you. One shot, not a future before, let's go. We are gonna have this conversation right now. 5 reasons that you shouldn't hold out for the market because you might be waiting for a very long time. In the Lease, you got Bezos and Musk that are both arguing, hey, we are at least 6 months into what we think will likely be an 18-month recession. But that doesn't mean a year from now that everything's fixed. I mean, so far year to date, we've lost over 130,000 tech jobs. We have 62% of Americans check to check. And you think that's all of a sudden gonna change eventually when the Fed brings the rates down? I don't think so, which means for the next few years, you could be waiting and you could be missing out on using your most valuable asset. And it's not the money you got, it's the time that you're wasting. It's called the herd mentality. While an economic recession is indeed being forecasted, it is actually projected to be much less severe than 2008 was. However, most people aren't getting that message. All they hear is doom and gloom, causing them to stop investing out of fear. Today, I want to go over the 5 reasons why waiting out this recession is probably the worst advice that you could get out there. And instead, figure this one thing out. You realize when everyone goes this way, that the opportunity is over here. That's like what Warren Buffett talks about with blood in the streets. He says when there's blood in the streets and there's terror and there's panic and there's fear, that's when the biggest opportunities are. And I'm telling you right now, this is one of the great opportunities of your lifetime. There's real estate to buy, there's business to buy, but if you're on hold because of this bad word, inflation, I want you to think again. Inflation is awful for cash, it's awful for 401ks, it's awful for the stock market. It is not awful for your friend, Mr. or Mrs. Real Estate. Inflation is a slow and steady killer of fortunes. At the current 5% inflation rate, $10,000 in January will only be worth $9,500 in December. Compound that over a few years as prices continue to rise, and you'll be wishing that you had invested your cash into hard assets where value rises with inflation, not decreases. AKA, when inflation was at its worst, what happened to real estate? The national median went from $265,000, now it's clear over $400,000. And when the Fed lowers interest rates because they're getting inflation under control, what do you think will happen to real estate? What do you think will happen when you're missing 5 million homes in the market and all of a sudden say the rates are low and people start buying again? It will drive the prices up again. So instead of waiting for the interest rates to go down, you should be buying while they're high because the moment they drop, price of real estate gonna skyrocket. Speaking of interest rates, it does beg this question. What kind of impact does an interest rate have on the ROI? If I told you I was buying an investment property with a 5, 6, or 7% interest rate, you might assume that it would have a huge impact on the ROI or the return on investment on the money that you make. And I got news for you. It just doesn't have that big of an impact. Everyone's talking about how bad interest rates are right now, but did you know that the current Fed rate of 5.25% is actually below the 50-year average of 5.4%? Interest payments are a cost like any other thing. Include it in your balance sheet, but don't stop investing just because one cost went up, because at the end of the day, you don't buy property to make a fortune because of an interest rate. An interest rate is, at the end of the day, only a cost. It is a controllable feature, and there's so much money to make across the board in real estate. That's why the interest rate has such low bearing on the amount of money that real estate makes you. It's kind of ironic that the first 25 homes that created financial freedom for me that I bought in my backyard here in Utah, did you know that the interest rates ranged from 4 to 8%, 5, 6%? That was normal. That's how I built all my wealth. That's why I'm not afraid to invest in real estate with these interest rates. The doom and gloom headlines that are out there right now are scaring and creating this herd mentality, and it is really hurting people. But the wealthy, they know better. And if you're a subscriber on this channel, you too now know better, which means the time to invest in real estate is probably when? Whether you're building a business, buying a business, investing in real estate, this next reason has made me more money than anything else, and it's called opportunity cost. It was the most confusing notion to me when I was a college kid in my basic economics class, but I live and breathe by this today. Real estate generates wealth through cash flow and appreciation, both of which take time to build up. Successful real estate investing is a lot more about time in the market rather than timing the market. In other words, opportunity cost means by doing nothing, what are you missing out on? Oh my gosh, the deals that I'm doing and the money that I'm making out, trust me, you missing out by waiting in a really big way. And the reasons why we're waiting are very erroneous. When there's wealth to be made, like there is during every economy, whether it's up or down or sideways, remember, a great economy when everyone runs this way, you should be looking backwards. A horrible economy when everyone is running this way, you should pause and you should look backwards. That's why you can make money in up and down markets. And then of course we have Warren Buffett's famous quote, buy when there's blood in the streets. And what is he talking about? He's talking about the power of fear. In other words, when consumers are afraid and they stop, that's when the real opportunities emerge. When people are afraid of a recession, they tend to withdraw their cash from the market and make impulsive decisions. This decrease in demand lowers prices, making the exact time when few people want to buy the absolute best time to invest. Right now, people are talking about how bad it is for commercial real estate, how bad it is for single family, how bad it is for multifamily. And all I see is that all the demand is temporarily gone because of the high interest rates or because of inflation. And guess what I'm getting right now? Do you think that I'm paying top market for this? Do you think I'm buying this real estate deal at market? I'm buying it below market, folks. Like the best deals in real estate that I've waited a decade for are presenting themselves to me because people are scared. Let's talk about real estate for just a moment because it is how we became financially free for the first time over 15 years ago. There are 324 markets that make up the United States. They're not all created equal. Each market is unique. So what's bad over here might actually be really good over here, and yet most people think in broad, sweeping thoughts. Even though real estate is talked about as one big thing, each individual market actually follows its own unique cycle of growth, correction, and regrowth. For example, are you aware that there are markets that are booming like crazy right now? Not just in population, but in migration. We had 500,000 people leave California last year, 500,000 people leave New York last year. Where did they go? They went to Texas and they went to Florida. So guess what's happening with that migration pattern? And then you have economies, industries that are moving there. Well, they're creating jobs like crazy, they're drawing people in, and while everyone else might be experiencing a reset, a crash, a something, it's really good in this neck of the woods. For example, San Francisco would have been a better investment back in 1998 than Austin, Texas. But Austin is a far better investment now. Successful investors know how to read market trends and then act accordingly. So even when I myself go and buy real estate in certain markets, did you know I'll only park it for 5, 6, 7, 8, 9 years? I'm gonna pull out, I'm gonna go to the next hottest market. And this is how I achieve really high ROIs, regardless of what's happening in the economy, whether it's booming or there's a recession. When would now be the right time for you to start investing? It's now. So check it out. If you've got money sitting in a 401k, an IRA, equity in a home, the stock market, crypto, anything out there that are soft markets that are going down with the market, real estate is where that market comes back and comes back up in a really, really big, meaningful way. Now, what you might not know about me is that I partner with people all over the world, and I have a turnkey, hands-free process where I'll do 100% of the work, and yet you get to be my 50-50 partner. We get to build wealth together. You get to piggyback on my track record of a couple $1 billion of transactions spread over 6,500 single-family homes. And I'm telling you right now, for the last decade, I haven't hardly learned anything new. You wanna know why? We mastered that niche. And now I just have a whole lot of happy investors that are crushing it in the market. And if you wanna be the next one, click the link below this video, get in touch with my team, read about and see my track record, see what I've done on my last several thousand homes. I'll literally show you all of the addresses, and I'll show you how we can partner up together and win by investing in the game of real estate. You literally could get this in your back pocket, my cell phone, where we are texting, connecting with each other, and building wealth together. Click the link, learn more, and who knows, maybe you'll be my next partner. Kris, you mentioned 324 markets. Are you saying that I might be in a bad market or my backyard might be a place where I shouldn't invest? Well, here's what I will tell you. The best real estate investment does have very certain criteria. And if you want to know what it is, click right here, watch this video. Let me show you how I win over and over and over again.